Today, May 16, 2025, marks a historic moment. Moody's downgraded the U.S. credit rating from AAA to AA1. This move strips the United States of its last perfect credit score among major rating agencies, signaling serious concerns about our nation's financial health. Moody's decision to lower the U.S. credit rating stems from a decade-long increase in government debt and interest payment ratios, which have reached levels significantly higher than similarly rated sovereign nations. This downgrade follows similar actions by Fitch in 2023 and S&P in 2011, leaving the US without a top-tier credit rating from any major agency. The downgrade could have far-reaching implications. As the US government's creditworthiness is questioned, investors may demand higher yields on Treasury securities, increasing borrowing costs. Also, uncertainty about the government's fiscal stability can lead to increased volatility in financial markets, and also the US dollar's status as the world's reserve currency could be challenged, affecting international trade and finance. Moody's forecasts that the federal debt will rise about 134% of GDP by 2035, up from 98% in 2024. This projection is driven by persistent fiscal deficits, rising interest costs, and a lack of effective policy measures to address this issue. The agency also expressed concern over political polarization, which hampers the government's ability to implement long-term fiscal strategies. Let's see how the market reacts when it opens on Monday, because this downgrade could spook investors, especially if bond yields spike or we see a rush into safer assets. Will stocks shrug it off like they did with Fitch's downgrade in 2023? Or will it trigger something bigger, especially with inflation still a little bit sticky and the Fed staying boxed in? Either way, we'll get our first fiscal read when futures open Sunday night and when volume kicks in Monday morning. So if you're watching this before then, make sure you pay attention to Treasury yields, the US dollar, and of course the major indices. I appreciate you guys for watching, and I'll see you in the next one.